I think that, once we break out of the pan and handle formation and get into brand new highs in dollar terms, that we're in for a slingshot move. The gold is going to move very fast and very high. Hi, everybody. We're back again with Ronnie Stoeferle of Incrementum AG and the In Gold We Trust chart book. Ronnie, how are you doing?
Mike, very well. Good to see you. Thanks for having me again.
It's great to have you here. So let's go over, let's just jump right back into the chart book. And now, everything we talked about in the previous video, this relates a lot of those topics with gold and how it affects gold. So tell us about this chart here, the red, the blue, and that pink area that is happening there.
Yeah, well, I think, Mike, it's really important to we in the Western world we tend to forget that in our world gold is it's something like for asset allocators it would be an alternative investment or a satellite in your portfolio. However, for the private individuals in China, in India, in Vietnam, in Turkey, it is much more than that. It's actually the foundation of their wealth. So as you can see on this chart here, it seems that the BRICS, but it's also other organizations like the SCO, the Shanghai Cooperation Organization, and many others, they are slowly but surely building their gold reserves. So last year, for example, we have seen the highest amount of central bank buying in history. And this year, so far, it's also going really well. I think the first half of the year, there was the highest purchases of the last 20 years, I think. So it is significant. And
but it's all the East, right? It's all the BRICS countries and so on.
Exactly.
The West is not buying. So anyway, you're going to show some of that in some upcoming charts. But anyway, go ahead. I'm sorry.
But I think, and this is really something where I wrote about quite extensively, and I think it's important if you want to understand gold. I think perhaps the West is kind of losing control of the gold market, and we've seen that quite recently with the premiums in Shanghai skyrocketing. It seems, and this is really an important message that I always tell people when I do keynotes, the price of gold is more and more being made in Shanghai, in Dubai, in Mumbai, and less so in New York, in London, and in Zurich. I think that really it's a really staggering amount of gold that is flowing into emerging markets, not only for the central banks, but also for private individuals. And we shouldn't forget, they're also pretty significant producers. So China and Russia at the moment are the two largest gold producers. So I think we should be a little bit less arrogant in the Western world and really focus what's going on in these countries, because they have become the decisive drivers, I would say, in the gold market.
Yeah, I absolutely agree. And the thing is, they seem to be getting ready for something, and the West isn't paying any attention. So, this one compares the gold purchases that have been going on for the East and the West to, the wealth, where a lot of wealth exists. For some reason, we're not buying any gold. And in the areas where there isn't that much wealth, they seem to know something is up, and they are buying a lot of gold. So just tell us about this real quick.
I think it probably also correlates with inflation and weak currencies. I mean, those countries, they have experienced very high inflation, even hyperinflation over the last couple of years. I always emphasize that when I did a keynote in Turkey, in Istanbul, the audience, the investors from Turkey, they ask the best questions about gold ever, because for them, gold is just natural. It is the foundation of their portfolios. Why? Because they're used to high inflation. They're used to a rubbish currency. And therefore, I think it's, the higher inflation is and the weaker the currency is, the higher the affinity for gold in a country. Now, obviously, in the Western world, so far, inflation is not really taken too seriously. I think it has changed definitely. While we all experienced the great moderation, so very low macro volatility, very low volatility of inflation. So actually, inflation numbers were coming down, 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 and now it popped up. And I think many people, investors, and especially institutional investors, still believe that this was just just one explosion of inflation, and now we're going back to the old regime, the great moderation. I don't really think so. And if we, for example, have a look at the price of gold in Japanese yen terms, I mean, have a look at this chart. It's beautiful. It's just, the perfect uptrend of
Yeah.
gold, Japanese yen terms, or downtrend of the Japanese yen measured in gold. So, and therefore, I believe that, this will kind of change, and we probably will all get used to significantly higher inflation numbers. And from my point of view, it would be pretty obvious that people over here, and we're seeing it already in Germany and in Austria, that gold demand has picked up significantly. But I think that should really continue. I don't know how it is in the United States at the moment. I think sales numbers are good, but they haven't really exploded yet. But I think at some point that's going to change.
Yeah, throughout history, what I see is that, a currency will start to lose value, which is the cause of inflation of prices. They inflate the currency supply, it's worth less. And so the currency is losing value, prices start going up. And at the same time, gold sort of lies in wait and then makes up for it all at once. It runs these waves and cycles. And that lag is the opportunity. And you look at the expansion of our currency supply and the inflation that is happening now at retail prices. And gold has, in my mind, a long way to catch up, and that is the opportunity. So emerging markets raise gold reserves amid de-dollarization. I noticed you've got the number of tons for each country. What is the bar on the top of that stack? Is that the rest of the world?
Yeah, that's the rest of the world. And actually, this is kind of an animation that we've made. It's we modeled it based on quarterly historical data, and we said that actually, I think in 2050 at the latest, emerging markets will have a higher amount of gold than the developed markets. I mean, of course, those models are always, they have to be taken with a grain of salt. But now, if you have a look at this pie chart, the emerging markets, they now have 15.5% of the global gold reserves, while the Western world has 84.5%. I think this is going to change. Why? First of all, we shouldn't forget that emerging markets, they are responsible for 87% of the world population. They own 54% of all FX reserves. And if you have a look at demographics and growth numbers of most of the emerging markets, it's definitely much more vibrant. That's really where the growth is. So therefore, I think that this tiny little part of the pie, I think it will increase significantly, not only because of this cultural affinity for gold, but also because of growing wealth in those countries.
Yeah, you mentioned the spread, the premium that people were paying on the Shanghai exchange
Yes.
in China. And that meant that during that period where they were paying a 6% premium over the international spot price, that was setting record high gold prices in renminbi. And when gold is in the news cycle at record prices, I mean, I don't know how that didn't. It has pulled back, so it's below its highs, its previous highs now from last year or the year before, whenever that the previous high was. The demand over there, though, the number of people, and then you think about how their economy seems to be on this very shaky foundation of real estate that was way overinvested, and the bubble there, the potential collapse of that, and the rush that could happen of renminbi into gold suddenly. And once it gets in the news cycle, it's this self-reinforcing thing. I think that, once we break out of the pan and handle formation and get into brand new highs in dollar terms, that we're in for a slingshot move. The gold is going to move very fast and very high. And then, central bank purchases. Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, goldsilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making goldsilver.com your dealer, and now back to the video. And then, central bank purchases. Just run us through this real quick.
Yeah, I mean, as I've said before, I mean those numbers are just staggering, and we have to ask ourselves, well, why actually did central banks really start buying so much gold for in last year? And I think the explanation is pretty obvious. I mean, it's crystal clear that with the sanctions against Russia, after they started the war against Ukraine, when the US and the EU basically, what was the number, like 350 or 400 billion of Russian reserves were basically with the stroke of a pen kind of written off or frozen. I think for many other countries this was kind of a warning shot, and I said, well, we're somewhat, our relationship with the United States isn't so well. We are heavily invested in US dollar assets, so therefore perhaps we should diversify a little bit, and in what asset class should you diversify? It should be neutral. It should be very liquid. It should have a low bid-ask spread. It should be accepted all over the globe. And you don't want to have any counterparty risk. I think that's really crucial. And I think gold, fits pretty well into that. And therefore, I think that, and that's really interesting, Mike, as we are seeing that the Western financial investor isn't really participating in this recent move in gold. So we have seen massive outflows from the gold ETFs over the last couple of months, and it was compensated, or it was even overcompensated by central bank demand. And if I work through the material that is being put out by the central banks, by the local central banks, it seems that they have established long-term buying programs for gold. So therefore, I think this central bank buying trend, this will stay around for quite a while, and I think this will be some sort of the foundation of this bull market.
So tell us about I'm not sure what ATH stands for. What
all-time high? Sorry,
all-time high. Okay.
Yeah.
Yeah. Tell us about that last bar. So that's this is.
So that was the record amount of central bank buying last year, and as I've said, I mean, the
2022. Okay.
2022, yeah.
2022. Okay, and so that is both because of the war and Yeah. Okay.
So it was the People's Bank of China. They announced in November and in December that they were actively purchasing again, and they have been pretty quiet for a while. So I think this is also the symbolic character of the Chinese saying we're buying gold again. I think that shouldn't be underestimated.
Right.
We saw that Egypt was buying, Qatar, Uzbekistan, Iraq, the United Arab Emirates, Turkey, obviously. Turkey was the largest purchaser last year. But then also quite recently, Singapore, for example, but also Poland, Hungary, and the Czech Republic. So it's actually kind of diversified. It's really all over. And I think that's
But
a really
what's interesting though is it's never the Western countries. What
yes.
would you consider the Western countries? So it's the rest of the world getting ready for something and wanting to put themselves on an equal footing with basically like the U.S. being the largest holder of gold. So yeah. With that, I think that we should wrap this one up. Is there anything else you want to say about this chart or about gold and central banks?
No, Mike. I think it's just exciting, following the gold market at the moment as there's so much going on, and all those geopolitical developments. They now really meet the financial or the monetary problems that we've been forecasting for quite a while. So it keeps me up at night, but it's super interesting.
What amazes me is that being a precious metals dealer, I see when people want to buy and when they have no interest in it. So, and right now there's this big lull where, in my opinion, this is when you want to get ready for something. You don't want to be chasing price or buying out of fear. And so you want to buy when things are moving sideways or taking a dip if possible. But there is, to me, I mean, it's very obvious. Do you agree do you feel like there's more to this financial crisis than we've experienced thus far?
Well, yeah, I mean, definitely. What we're seeing now is, it's, as I've said, it's kind of a storm brewing, but it's, my friend Tavi Costa, it's really a couple of issues coming together now. It is like, first of all, it's an inflation problem and also a geopolitical crisis, like we've seen in the 1970s. Then we're seeing issues in the bond market that we haven't seen in a while, because as I've said before, it's really frightening what's going on in the bond market. We're seeing a speculative environment like in the late 1920s and in the 1990s, where those magnificent seven, all those seven big tech stocks, they still keep doing well, while the rest of the market is actually going sideways or even lower. So this all coming together, that's a pretty explosive setup, and having this ridiculously hawkish Federal Reserve in an environment where they should have actually lowered rates already quite significantly. That's an accident waiting to happen.
Well, they're only going to lower them and once they have popped the bubble, past tense.
Yes.
They're instead of trying to actually bring us in for a soft landing, it's been. I did a series of videos on this. It was in December of last year. That they aren't even trying to bring us in for a soft landing. So anyway, with that, I want to thank you so much for presenting all of this, and thank you for all the work that you've put into this, because the audience has no idea the level of work it takes to do something like this. So tell them again where they can download this chart book.
Yeah, no, but Mike, I have to thank my team, because we're we're 20 people actually working on the report and all of our publications, and it wouldn't be possible without the support of our premium partners. So I'm only the guy talking about the charts, but we've got a terrific team that is actually building them and doing the layout and everything. Well, if you want to download the chart book and subscribe for our services, just have a look at ingoldwetrust.report. You can download our In Gold We Trust report, more than 400 pages, but there's also a compact version totally for free. You can download all our chart books, the monthly gold compass, but also this special chart book. And yeah, as I've said, you don't have to register. Of course you can. We'd be happy about it, but you can download everything totally free of charge on our webpage, ingoldwetrust.report.
Awesome. I want to thank everybody for watching, and thank you, Ronnie. We'll see you next time.
Thank you, Mike. See you soon. Bye-bye.
Hi, I just wanted to tell you about Gold Silver's 111-ounce silver giveaway, where you can win 111. One 1-ounce silver bar, one 10-ounce silver bar, and one 100-ounce silver bar. So enter today and win.